So where does this leave us here at West Edge? Number one, $4 trillion recovered in 30 hours. Gold up 11% from bottom, silver up 20%. This proves Friday was forced liquidation and this week is short squeeze. Retail panic sold at the bottom while institutions bought. SLV 41 billion volume world record. Singapore queuing vaults draining 2.8% in one day. The physical bid never left. Only paper got flushed. Number two, Xi Jinping official article reveals China's gold strategy. Gold pricing power equals strong currency. Top task for financial power. China buying 10 times reported amounts. November 10th tons actual versus 0.9 tons reported. September 15 tons versus official report. The global gold final battle is about to break out. Precious metal pricing shifting eastward. Whoever has the gold has the final say. And China is positioning while everyone watches paper volatility. Number three, U.S. launching 12 billion critical mineral stockpile. Japan debt crisis pulling 1.22 trillion from U.S. treasuries. Dollar dumped fastest in 2 years. These are the forces creating volatility, but the 4 trillion reversal in 30 hours shows the underlying strength. Banks trapped in shorts, margins hiked, but metals ripping higher. Physical scarce dealers sold out vaults, draining the squeezes underway. The unresolved tension is this: 4 trillion recovered in 30 hours, but Japan's carry trade unwinding and treasury yields spiking. Create systemic stress. Does the forced liquidation resume and take us lower? Or does the physical shortage and China's gold strategy drive the next leg higher? March is approaching delivery month. COMEX registered stocks depleted. China accumulating secretly, Singapore queuing. Can't wait to see the silver price in March. Do your own due diligence. Understand the risks. Japan's debt crisis is real. Treasury yield stress is real. But 4 trillion in 30 hours. 2.8% vault drain in one day. China buying 10 times. Reported, Xi's gold article official policy. These are also real. The paper market creates volatility. The physical market creates the floor. Know which game you are playing long-term or short-term. Invest with logic, not hype. Use your own brain. Don't follow anyone blind. We need to dive deeper into the mechanics of what happened with the algos, because that is where the real theft occurred. When the price of gold smashed down, it triggered a cascade of stop losses. These are automated sell orders that retail traders put in place to protect themselves. But the banks know exactly where those orders are sitting. They can see the order book. So they dumped a massive amount of paper contracts onto the market to push the price down just enough to trigger those stop losses. Once the stop losses trigger, it creates a flood of selling, which pushes the price down further, triggering more stop losses. It is a domino effect. And who is sitting at the bottom with a basket waiting to catch all those cheap shares? The very same institutions that started the slide. That is why we saw $4 trillion recovered in 30 hours. It wasn't new money entering the market. It was the smart money buying back the assets they forced you to sell. West Edge has seen this pattern play out in 2008, in 2011, and in 2020. The playbook does not change because it works. The retail investor operates on emotion. The institutional investor operates on liquidity. And liquidity is drying up. Look at the reverse repo market. It is draining. Look at the bank term funding program. It is ending. The system is starving for cash, and when the system starves, things break. Japan is the first domino. When Japan raises rates, it sucks liquidity out of the global system. That $1.22 trillion of U.S. debt held by Japan is the bedrock of the Western financial system. If they sell even 10% of that, it sends U.S. yields into the stratosphere. And when U.S. yields go up, the U.S. government interest payments go up. We are already paying over $1 trillion a year just on interest. That is more than the defense budget. It is unsustainable, mathematically. And when something is unsustainable, it will eventually stop. The question is, how does it stop? It stops with a reset. And that is what China is preparing for. That is what the gold accumulation is about. It is not just an investment for them. It is an insurance policy against the collapse of the dollar system. Xi Jinping knows that the U.S. cannot inflate its way out of this debt without destroying the currency. So he is moving into the only asset that has no counterparty risk: gold. The West Edge community needs to understand that we are in the late stages of a fiat currency cycle. Every fiat currency in history has eventually returned to its intrinsic value, which is zero. The dollar has lost 98% of its purchasing power since the Federal Reserve was created in 1913. We are watching the final 2% evaporate in real time. That is why inflation is sticky. That is why the cost of living is skyrocketing. It is not that prices are going up. It is that the currency is going down. And gold is the mirror. And when gold hits 4,900 or 5,000, it is not that gold is becoming more expensive. It is that the dollar is becoming worthless. The $4 trillion recovery in 30 hours is just the market trying to price in this reality. The algos can suppress it for a day or a week, but they cannot suppress it forever. The physical demand is the gravity that eventually pulls the price to where it belongs. Let's look at the silver industrial demand again, because this is the sleeping giant. Solar panels, electric vehicles, 5G towers, AI servers. They all require silver. It is the most conductive metal on Earth. You cannot have a modern economy without silver, and the mines are not producing enough. We have been in a structural deficit for years. We consume more silver than we dig out of the ground. The difference has been made up by above-ground stockpiles. But those stockpiles are gone. They are draining. 2.8% out of the vaults in one day. That is a run on the bank. When the industrial users realize they can't get metal, they will panic. An industrial panic is different from investment panic. An investor can choose not to buy silver. An industrial user like Apple or Tesla or a solar manufacturer cannot choose not to buy. They have to buy at any price or they go out of business. That is inelastic demand. And when inelastic demand meets shrinking supply, the price goes vertical. That is the silver squeeze. It is not a Reddit movement, it is a geological reality. West Edge will continue to monitor the Shanghai Gold Exchange because that is the leading indicator. The arbitrage is open. You can buy gold in London and sell it in Shanghai for a profit. This sucks physical metal from the west to the east. It is a giant vacuum cleaner moving the world's wealth to China. And the West is letting it happen because they are obsessed with keeping the paper price low to mask inflation. It is a strategic blunder of epic proportions. History will look back at this moment as the transfer of hegemony. Just like the British Empire lost its gold reserves to the US during the World Wars, the US is now losing its gold reserves to China. The $4 trillion in 30 hours is just the tremor before the earthquake. So what should you do? You should ignore the noise. Ignore the intraday volatility. If you are holding physical metal, you are your own central bank. You don't have counterparty risk. You don't have to worry about a bank bail-in. You don't have to worry about the power grid going down or the internet getting hacked. You hold the wealth in your hand. That is why Singaporeans are queuing. They understand. They have seen currencies fail before. The West has lived in a bubble of stability for 80 years, and we think it will last forever. It won't. The cycle is turning. West Edge is here to document that turn. We are not financial advisors. We are historians of the present. We look at the data that the mainstream ignores. We look at the vault movements, the lease rates, the basis spreads, and everything is flashing red. The $4 trillion reversal was a warning shot. The next move will be the breakout. Stay liquid, stay educated, and most importantly, stay skeptical. The official narrative is designed to keep you poor. The data is the only thing that will set you free. As we move toward the March delivery numbers, pay close attention to the open interest. If the banks cannot cover their shorts, they will have to change the rules. They might settle in cash. They might raise margins again. They might even suspend trading. We have seen it with nickel on the LME. When the casino starts losing, they turn off the machines. Be prepared for that. That is why physical is king. Paper promises can be broken. Gold bars cannot be deleted. The $4 trillion recovered in 30 hours is a reminder of the power of this market. It wants to go higher. It is being held down like a beach ball underwater. Eventually, the arms of the manipulators will get tired and the ball will rocket to the surface. We are getting very close to that moment. China is ready. The vaults are empty. The debt is imploding. The stage is set. This is West Edge signing off. Watch the charts, watch the vaults, and trust your gut. The greatest wealth transfer in history is underway. Don't be on the wrong side of it. The numbers do not lie, and the reversal we are witnessing right now is nothing short of historic. Gold is up 11% from the bottom and has reclaimed the 4880 level, adding over $3.07 trillion in value in just 30 hours. Silver has ripped almost 20% from the lows and is back above 88, adding another $800 billion in that same 30-hour window. If you combine these figures, that is nearly $4 trillion of wealth recovered in a day and a half. That is roughly 35% of the recent $11 trillion wipeout recovered in the blink of an eye. But here's the kicker, and this is the part that you need to pay attention to because it tells you everything about who is actually in control of this market. That $4 trillion was recovered while retail investors were panic selling. This is what forced liquidation looks like on the way down, and this is what a short squeeze looks like on the way up. The volatility isn't the problem. The volatility is the opportunity. And if you were watching West Edge, you knew this was coming. Gold is back over 4,900 and silver is back over 88 after a violent shakeout designed to steal your shares from all-time highs. The metals market just added over $4 trillion in market cap, and the mainstream media is completely silent on the mechanics of this move. You have to realize that this channel has been tracking the institutional planned crash for weeks. When we discussed the bank manipulation strategies, we warned that the drop would be sharp, and it would be terrifying, but it would be fake. Now that the dust is settling, we can see clearly that West Edge was right. While other channels were screaming that the bull run was over and telling you to sell, we stood firm on the data. After our last update, we saw viewers unsubscribing because they couldn't handle the heat of the drawdown, but look at the charts now. The channels that copy our titles and our thumbnails and paraphrase our analysis have grown, but they don't have the conviction because they don't understand the source code. West Edge is the source code. Without our deep dive analysis, hundreds of hype-based finance channels would vanish because they wouldn't know what to say. But we remain here guiding the people who actually want to understand the wealth transfer. Our analysis remains unbiased, researched, and strictly to the point. We are confident in precious metals, not because of hope, but because we are not blind to how the markets are manipulated by institutions and how the system is trying its absolute best not to show signs of breaking. This channel was started with a mission of education and unfiltered truth, and the team at West Edge will not back down no matter the consequences or the algorithm suppression. Now, let's look at what makes this $4 trillion reversal even more significant than just the price action. Another 2.8% of silver left the vaults in only one single day. The vaults are draining at an accelerating rate. And while this physical drain is happening, China just revealed its endgame. The official website of China's central government has released an important article by Xi Jinping titled "Building a Financial Power." Now, you have to be careful here because the Chinese version is significantly different from the translated English version you might see in the mainstream press. In the original Chinese version, there are 6 core tasks listed with having a powerful currency as the absolute top priority. Having a strong currency is the top task in building a financial power, according to Xi Jinping. And here's the key. The prerequisite for having a strong currency is to gain pricing power of gold to become the #1 producer, consumer, and importer of gold in the world, and to possess the world's largest gold reserves. This article was published in the official journal of the central government, and it acts as a signal. It is effectively a military parade in the financial sector. It shows that China is close to completing the preparation, and its huge gold reserves will support the internationalization of the yuan. The global gold final battle is about to break out. Gold defines the value of all national currencies and the new international financial and monetary order. China is one of the main players in the gold final battle. Let that sink in. This is not speculation from West Edge. This is official Chinese government policy published by the head of state. Gold pricing power equals strong currency. China is positioning for the final battle, and it is happening right before our eyes. Precious metal pricing is shifting eastward. Whoever needs and processes the most silver has the upper hand. Whoever has the most gold has the final say. And the data confirms China is executing this strategy right now. China is buying 10 times more gold than it officially reports. In November alone, China bought 10 tons of gold, which is 11 times more than the 0.9 tons they officially reported to the IMF. This follows September, when the central bank acquired 15 tons, which was 10 times more than reported. They are accumulating in secret while publishing minimal official numbers to keep the price suppressed until they are ready. The real reserves are far larger than anyone knows. Look at the current prices as we record this. Western spot is at 88. Shanghai spot is at 114. Shanghai futures are at 102, bounced from 95. Premiums dropped from yesterday, but are still holding a $16 premium, which is 20%. After a 40% crash and a 20% bounce, the premium is compressing but still elevated. Physical is still trading significantly above paper. Now let's connect this 4 trillion reversal to what we discussed all week here at West Edge. This drop was 100% manufactured by big players. While the crowd panic sold hedge funds and central banks quietly bought the dip, they used algorithmic entries to secure volume at the bottom. Remember, the screen price is the paper derivative price. It is leverage. It is speculation. It is fake. The real price is what it costs to get metal in your hand. Look at Singapore. Singaporeans are queuing for gold despite falling prices. On Monday, retail investors crowded United Overseas Bank, which is Singapore, as only bank offering physical gold over the counter. Even as bullion prices plummeted, many were buying the dip, betting that gold's main drivers remain intact. The scene highlights extraordinary retail demand in Asia, showing that even sharp declines are not deterring individual investors from adding physical gold to their portfolios. Meanwhile, gold prices are up $500 or 9% since the low back to $4,900. And paper market activity spiked to unprecedented levels. The largest silver-backed ETF, known as SLV, saw trading volume hit a record 41 billion on Friday. SLV activity was higher than any single traded stock in the whole world. That is not retail. That is institutional. That is the paper market going insane while physical buyers queue in Singapore. All the banksters achieved yesterday in slamming silver further down from Friday's low was to only shave approximately 6,000 contracts from total CME silver futures open interest, which is now down to approximately 14,200 contracts. Reminder, back in 2011, at the top of the Reddit-driven silver squeeze attempt, this figure was north of 25,000 contracts, and volatility rose all the way to 138. Sadly, for all those who think what is happening today is retail-driven, the data keeps telling a very different story. This is not retail. Retail was panic selling at the bottom while institutions bought. The $4 trillion recovered in 30 hours proves it. Retail does not move $4 trillion in 30 hours. That is sovereign wealth funds. That is central banks. That is China executing the gold strategy while paper crashes. There is a war between the US and China to secure scarce and critical silver. Good luck to the shorters fighting against that. The U.S. government is starting a gold and silver stockpile. Trump unveiled a $12 billion critical mineral stockpile scheme in an apparent move to counter China's dominance. The project will initially be funded by a $10 billion loan from the U.S. Export-Import Bank and nearly $1.67 billion in private capital. They are securing critical metals before the currency devalues. The government is literally telling you to buy real assets. And there's only one 1,000-ounce silver bar left available in pre-sale at Bullion Star. And then this major bullion dealer will also be sold out of the bars that industrial buyers are after. The physical shortage is real. Dealers are running out. Vaults are draining 2.8% in one day. $4 trillion recovered in 30 hours. China buying 10 times reported amounts. The squeeze is on. The gold and silver pump has only just begun. They hiked margins to try and stop it. They manipulated the price to kill it. And yet it keeps ripping higher. The banks are trapped. The squeeze is now, and most people have absolutely no idea what is about to hit them. Now let's address the risks, because there are real headwinds, and West Edge is not here to sell you hopium. We are here to analyze the reality. Japan's 30-year bond yield just hit the highest level since these bonds were invented. The U.S. Fed is now propping up the currency of another country. Japan has the worst debt crisis of any major country on Earth. Their debt to GDP ratio is 250%. The U.S. is at 120%. Japan owns $1.22 trillion in U.S. debt, more than any other foreign country. For 30 years, Japanese investors have been doing the carry trade. Borrow money in Japan at 0%, send it to the U.S., buy treasury bonds paying 4 to 5%, and pocket the difference. But now Japanese bonds pay 3.7%. The spread is gone, the free money is over. Why would any Japanese investor send money to the U.S. for an extra 0.3% when they have to deal with currency risk? They won't. That means hundreds of billions of dollars, maybe the full $1.22 trillion over time, is getting pulled out of U.S. treasuries. When bond supply goes up and demand goes down, yields spike. When yields spike, everything else falls. The S&P already dropped 2%, over $1 trillion wiped out. The Treasury Secretary is literally calling Japan, begging them to calm the markets. And the Fed is stepping in to prop up the yen. The U.S. dollar was dumped over the last week at the fastest pace in at least the last 2 years. The 10-year Treasury yield is approaching the highest level since August. This is stress. This is why gold and silver got hit initially. Forced liquidation as margin calls spread across the system. But now the bounce $4 trillion in 30 hours. Because once the forced selling stops, the underlying bid returns. Central banks buying, China accumulating physical, scarce the fundamentals overwhelm the paper manipulation. But here is the bullish case. The stock market is now entering its final bubble phase. But silver, gold, and specific strategic commodities will continue to strongly outperform, thereby signaling that something is seriously wrong. U.S. stock market concentration is at record levels. The market has never been this top-heavy. When this breaks, money flows to real assets. Gold, silver, physical commodities. Wild rebound metals aren't done. Can gold retake 5,000 and silver challenge 100 again? The momentum is shifting. 2.8% vault drain in one day. China buying 10 times reported. Singapore queuing, Bullion Star down to 1 bar, $4 trillion recovered in 30 hours. The paper flush created the opportunity. Now the physical reality reasserts. China is preparing to officially reveal its actual gold reserves. If Xi's article is the September 3rd military parade in the financial sector, and China is close to completing preparation, the reserve announcement could be the trigger. When China reveals reserves 10 times or 20 times higher than officially reported, the entire gold market reprices instantly. Every central bank globally